Hello friends. Friends, we are going to continue with debentures, right? So, in the last lecture, we started the topic of issue of debentures as collateral security, right? You take a loan from the bank and the bank asks for additional security in addition to the first security, right? That is issue of debentures as collateral security. In this we did two methods, right? Method 1, no journal entry, and method 2, journal entry is passed. This is what we discussed, right? In that lecture I missed out on one point that is quite important. Write down that interest is not payable on debentures issued as collateral security. Why? Because we are not getting any money against this issue of debentures. This is just to secure the money that we have already taken from bank. We are paying interest to the bank. Here we are not getting any money against the issue of debentures. So if we are not getting any money against the issue of debentures, then there is no question of paying interest on money, right? So interest is not payable on debentures issued as collateral security. This is one very important point. I missed out in the next lecture. That is why I am specifically mentioning it here. Clear? Now the topic that we are going to study in this lecture is various cases of redemption. Right? Various cases of redemption. Clear? Now the question you people will ask me is why we are studying redemption of debentures at the time of issue of debentures. We have a whole chapter on redemption of debentures, We'll do that chapter after this one. Then why we are studying this redemption of debentures at the time of issue of debentures? There are very simple two reasons for that. One reason I told you in the very first lecture, that terms and conditions of redemption are specified at the time of issue of debentures, isn't it? This is one reason that why we are dealing with redemption at the time of issue of debentures, because terms and conditions of redemption are specified at the time of issue of debentures only. Clear? The second thing is Prudence concept. Because of this concept, we will be studying redemption at the time of issue of debentures. Now you people will tell me what is a prudence concept. This concept you must have studied in class +1. This is the very basics of accounting, the principles of accounting, right? Remember the principle of going concern, then the principle of prudence. What is a prudence concept? Principle of prudence. What does it say? It says a very simple thing. It says anticipate all losses, right? Do not anticipate profits. What does this mean? Today, if you believe that you are going to have losses in the near future, create a provision for those losses today. Consider that the loss that you are going to incur in the near future, that is the loss of today. Provide for that loss today. Do not wait for the event to occur. Do not wait for the loss to occur. Provide for that loss right now. The other thing it says, do not anticipate profits. He says, how much profits you are going to earn in the near future, do not anticipate those profits. Whenever you will earn those profits, record those profits in the books. But do not anticipate that this is the amount of profits that we are going to earn, because the future is really uncertain. You don't know how much profits you are going to earn, but always provide for losses. This is a concept of conservatism, right? Provide for all losses, but do not overestimate your profits. Do not anticipate profits. If you believe you are going to suffer losses, provide for losses today, right? But do not estimate what are the profits you are going to earn tomorrow. You might not earn, and you might earn a lot of profits, but do not consider them today, right? Provide for losses today. That is the prudence concept, right? Because of this concept, we are going to study this redemption cases at the time of issue of debentures. Clear? How we are going to use this prudence concept, I will tell you, right? Now let's first start with the various cases. Remember one thing. I told you that issue of debentures can be at three types: at par, at premium, right, or at discount. This is what we discussed. Issue of debentures can be at par, at premium, or at discount. Now the interesting thing I am going to tell you is redemption of debentures. Redemption of debentures can be of only two types. That is either at par or at premium. Right? Now, at the time of issue of debentures, you receive money, and at the time of redemption of debentures, you have to pay money to the debenture holders. Right? This is receive money, and this is pay money. Right? Remember these things now. Okay? So, issue of debentures can be at par, premium, or discount, but redemption of debentures will always be at par or at a premium. Now, let us take case 1 now. Case 1. Issue at par, right? Redemption at par. Right? Now, what is the entry? Suppose we'll take one common example. You issue 10,000 10% debentures of rupees 100 each. Right? You have issued 10,000 10% debentures of 100 each that are redeemable at par. These are issued at par, these are redeemable at par. What is the journal entry at the time of issue of shares? Bank I'll take it as issue at lump sum. Okay, all the money is receivable at the time of application, right? To debenture application account, right? How much? 10 lakh and 10 lakh. Then what is the entry at the time of allotment? Debenture application account debit to 10% debentures account, that is 10 lakh and 10 lakh. Clear? This is the entry at the time of issue of debentures. Now these shares are being redeemed at par, right? So you have taken 10 lakh rupees from the people and you are giving them 10 lakh rupees. Is there any profit or loss? No. So nothing to be done related to redemption in this case. These are the entries only related to issue, nothing to do with redemption, because from the people you are taking 10 lakh rupees and you are returning 10 lakh rupee to the people. So nothing to be done at the time of redemption, no profit, no loss. Simple. Case 2. Case 2. Issued at discount. Issued at discount. Right? Issued at discount and redeemable at par. You issued 10,000 10% debentures of rupees 100 each at rupees 95. That is, at a discount of 5 rupees, you have issued these debentures which are redeemable at par. That is, we will redeem at rupees 100. Right? Okay, I'll write this down. Redeemable at rupees 100. Clear? Now, what is the journal entry at the time of issue? Bank account debit, to debenture application. Now, what is the amount of debenture application? 10,000 shares multiplied by 9,50,000. We have to, right. Debenture application, you received 9,50,000. 9,50,000. Now, when you are going to allot this debenture application account debit, 9,50,000, but you have issued debentures. If we talk of 10% debentures, this is going to be 10 lakh, that is face value. Then the remaining will go to discount on issue of debentures. This comes to 50,000. Right? Now what is happening? You are receiving 95 rupees. You are giving a discount of 5 rupees to the people. You are getting 95, but you are paying 100 rupees. You will say it is a loss. Discount on issue of debentures is a loss. Yes, it is a loss, friends. Right? But your debentures are standing at 10 lakh rupees. Isn't it? Your debentures are standing at 10 lakh rupees only. And this loss you are going to meet from securities premium reserve or the profit that you will earn. Right? So your loss will be compensated here. Your 10% debentures are, the face value remains 100 rupees. And when you are redeeming at 100 rupees. Basically, what you have done is you have taken 95 from the people, 5 from your profits. You have completed 100 rupees and 100 rupees you are returning to the people. Is there any profit or loss? No. What you did, you took 95 from the people by giving them 5 rupees discount, and that discount of 5 rupees you take out from your profit or loss or the securities premium. You completed your face value. Your face value is 100 rupees and you are redeeming that share at face value only 100 rupees. So there is no profit, no loss. Right? So there is nothing to be done at the time of redemption. Right? In this case also. Now, third case. Talking of third case, issued at premium right, redeemable at par. Issued 10,000 10% debentures of 100 each for rupees 105. Right? Redeemable at rupees 100. What is the entry for issue? Bank account debit to debenture, application account 10 lakh 50,000. This will be the amount. 10,000 multiplied by 105, 10 lakh 50,000. Now, what you have done is you have taken 105 rupees from the people, right? And you are going to give them 100 rupees in the future. You have taken 105 and in the future you are going to give them 100 rupees. Isn't 5 rupees your profit? This 5 rupees is your profit. But are you going to? Okay, first of all, we'll pass the entry at the time of allotment. What is the entry? Debenture, application account debit to 10% debentures. Debenture application 10 lakh 50,000. In the debentures, you always enter face value 10 lakh and the remaining 50,000 will go to securities premium, reserve account. This will come as 50,000. Now what you have done is you have taken 105 rupees and in the future you are going to give them 100 rupees. You have taken 105, going to give 100 rupees. 5 rupees is your profit. But the prudence concept says do not anticipate profits. Do not record your profits. Right? This is where the prudence concept comes into the play. So at the time of redemption, you will have a profit of 5 rupees, but prudence concept says do not anticipate the profits. So we can't do anything. We will not pass any entry at the time of issue of shares for redemption. In this case also because of prudence concept. Although we are having a profit, we are going to earn the profit in the future when we are going to redeem at 100 rupees. But prudence concept says do not anticipate profits. Do not record profits today. When you will earn that profit, record that in your books, but not today. Right? So, the prudence concept stops us from recording the profit entry at the time of issue of debentures, because that profit is we are going to earn at the time of redemption. Clear? So this is the role of prudence here. This is the one role of prudence here. Clear? Third part is clear. Third case is clear. Now moving on to the fourth case. Now what we have done is we have done Issue at par, redeemable at par. Issue at premium, redeemable at par. Issue at discount, redeemable at par. Now we are going to take this part at premium. Now this is an important part, friends. Right? Listen to it very carefully. Fourth case. Issue at par, redeemable at premium. Right? Now this is one very important concept. Listen to it very carefully. Right? You have issued 10,000 10% debentures of rupees 100 each. Right? Now these debentures are redeemable at rupees 105. Now first tell me the entries for issue. Bank account debit to debenture application account. How much money you have received as application? 10 lakh at par. Then at the time of allotment, you will transfer debenture application account debit to 10% debentures account. Right? This is the entry what you pass. Right? These two entries are absolutely correct. Right? Now what you are doing is you are taking 100 rupees and you have pre-decided the terms that you will redeem at 105 rupees. You are taking from people 100 rupees and you are going to give them 105 rupees. Isn't it a loss at the time of redemption? Yes. You are taking 100, you are giving 105. This 5 rupees is your loss at the time of redemption of debentures. Now again the prudence concept comes into the play. The prudence concept says anticipate all losses. If you know that you are going to incur the loss in the future, provide for that loss right now. So this loss is your future loss. When you are going to incur this loss at the time of redemption, but prudence says record that loss right now. So how to record this loss? Loss is your expense. Right? The journal entry will be loss on issue of debentures, account debit to premium on redemption of debentures. Clear? So on 10,000 shares, rupees 5 is your loss. That means 50,000 is the loss. What is the premium? 50,000. Now how this account has been debited and credited? Loss is what? Loss is your expense. It says debit all losses and expenses. So we have debited loss on issue of debentures account. And premium on redemption of debentures is our liability. Because we have to pay that premium at the time of redemption, that liability is credited with 50,000. This is one major role of prudence concept that says provide for all losses. You can see if you have set the terms at the very outset at the time of issue of debentures that you will redeem the debentures at 105. You know 5 rupees is going to be your loss at the time of redemption. So the prudence concept says provide for that loss today only. Clear, friends? Right? Now, fifth case. Now we are going to take another case. That is, we are going to take fifth case now. Fifth case is issue at premium. Issue at premium, redeemable at premium, right? You issued 10,000 10% debentures of rupees 100 each at rupees 105. Now these debentures are redeemable. These debentures are redeemable at rupees 110. These debentures are redeemable at 110. Now, what is happening? What is the entry for issue? Bank account debit to debenture application account, right? How much? 10,50,000. 10,50,000. Clear? Then debenture application account debit to 10% debentures account and to securities premium reserve account. How much? 10,50,000. In the debentures, you will take face value, and securities premium is always taken to a separate account known as securities premium reserve account, and 50,000 will be taken to securities premium reserve account. Now, what you have done is you have taken 105 rupees, and in the future at the time of redemption you are going to give them 110 rupees. Isn't it a loss? Yes, again it is a loss. Now what is the amount of loss? You will say, sir, 5 rupees, because we have taken 105 and we are giving them 110. Actually it is not a 5 rupee loss, it is a 10 rupee loss. Because the 5 rupee premium, the premium of 5 rupees is kept in a separate pocket, that is securities premium reserve. So what is ultimately we are using is the face value 100 rupees only, right? So premium always we will consider with the face value. We will calculate with face value, right? At the time of redemption, when we are considering this premium, always compare it with face value, right? Remember this thing. Write down the note here only. Then only you will remember the things. At the time of redemption, premium is to be considered. Is to be compared. Premium is to be compared with face value. In this case, we'll consider it with rupees 100, because 5 rupees we have kept it in a separate pocket, right? So what is there in the debenture pocket, we have to consider with that. So what is the ultimate loss? Ultimate loss is 10 rupees on 10,000 shares. Right, that is 1 lakh rupees. So what is the entry for that we just discussed? Loss on issue of debentures, right? This is 1 lakh, 10,000 into 10 rupees, 10,000 shares into 10 rupees premium to premium on redemption of debentures. How much? 1 lakh rupees. Clear? So this is one important point, that at the time of redemption, always consider the premium, always compare the premium with face value and do not compare with this 105. Always compare with 100, right? So whatever over and above the face value is your premium. Clear, friends? Is it clear? So now, next case that we are going to take, right, let us take the sixth case. What is left? Issue at discount, issue at discount, right, and redeemable at premium. Issue at discount, redeemable at premium. So you issued 10,000 10% debentures of rupees 100 each at rupees 95, right? Redeemable at rupees 105. Clear? Now, first issue bank account debit to debenture application account. How much? 9,50,000, because we are issuing it at a discount. Next entry, at the time of allotment, debenture application account debit debenture application account debit to 10% debentures. Sorry, here we have to take discount also, right? In this we have 9,50,000 to 10% debentures. Will take the face value, and the remaining is discount on issue. How much? 50,000. Now you have taken 95 rupees and you have to give 105 rupees. It is obviously your loss. In any case, it is your loss, right? But we have to consider this 105. You have to compare with face value and not rupees 95. Compare it with rupees 100, not 95. Now it is a loss. And what the prudence concept says? Prudence concept says anticipate and provide for all losses today only. So simply your entry will be loss on issue of debentures account debit. How much? 5 rupees on 10,000 shares, 50,000. And which account will be credited to premium? Sorry, loss on redemption, not issue. Loss on redemption. Premium on redemption of debentures account, 50,000. Okay, I'll correct in the above entry also if I have written it wrong. Yes, loss on redemption and not issue, right? So what is the loss on redemption? Will be debited because it is an expense, and premium on redemption is a liability, so it will be credited. Clear? So these are the 6 cases of issue and redemption. Why we studied at the time of issue? Because of the prudence concept. Because we have to provide for these losses at the time of issue only. We cannot wait for the redemption. If we are studying issue, we have to provide for these losses at the time of issue only. That is why we did this topic at the time of issue. We have a separate chapter on redemption, but to provide for these losses according to the prudence concept, we studied this here. Clear? Now, we talked about these two topics, two basic entries. One is loss on redemption of debentures. Two things were new in this, and the other is premium on redemption of debentures. Right? Now, how to show these in the balance sheet? Premium on redemption of debentures will be, it is the liability, right? So it will be shown as either non-current liability. If it is shown as non-current liability, under the non-current liability, it will be shown as other long-term liability, right? And this other long-term liability you will show in notes to accounts. Clear? Or it will be shown as current liability if it is payable within a period of 12 months. This current liability, right? Other short-term liabilities. Subhead other short-term liabilities, and this will be shown in notes to accounts. Clear? Now, talking of this loss on redemption of debentures, it is our capital loss. Right? So this capital loss is to be written off as early as possible, and this can be written off from profit and loss account or securities premium reserve. Securities premium reserve account. Now remember, talking of securities premium reserve, I told you that there are restrictions on the money that is kept in this account. The restrictions has been put as per section 52 of Companies Act 2013. Now, the one purpose for which securities premium reserve account was used was to write off discount on issue of debentures. Now, this is the second reason. Second reason where we can use this account is writing off loss on redemption of debentures. One is discount on issue of debentures. Second is loss on redemption of debentures. Clear? Now, where this loss will be shown? In the balance sheet. In the balance sheet, it will be shown either under the head of non-current assets. Loss is shown on which side? Asset side. Non-current assets. Right? And under this subhead, other non-current assets. Because if this loss is to be written off after a period of 12 months, or current assets if it is to be written off within 12 months, right? Under current assets, other current assets. Clear? This is the disclosure in balance sheet. So this was one important topic related to issue of debentures. Clear? How to provide for losses at the time of redemption. According to the prudence concept, you have to provide for those losses at the time of issue only. Clear? I hope this topic is clear. This is an important topic in debentures, right? This will also help in redemption. So friends, if you have any queries, just send me an email at ksjteaching@gmail.com. right? And in the next lecture, what we are going to do is last topic, that is interest on debentures. With this, our issue of debentures will be complete. Then we will move to redemption, right? So in the next lecture, we'll be doing interest on debentures. This is a very easy and small topic. We'll wrap it up fast. Clear? Clear, friends? So that's all for this lecture. Thank you so much.